Good afternoon, everyone. Thank you for joining the Multifamily Investment Advisors as we present the multifamily market update today. We're going to start off by passing the ball to our Director of Market Analytics, Drew Heisman, to go over some multifamily market updates.
Thank you, Travis. Would you be able, do I have screen sharing right now?
Yeah, you should be able to share your screen.
Oh, it says host disabled it.
Oh, let's try it now.
Okay. All right, everyone, as you can see, this is the 10-year treasury. This is a 5-year overview, but I want to focus just on the last week. And as you can see, the 10-year is down about 13 basis points. So the 10-year has dropped to around 1.15 at 1.16 now, amid disappointing economic data and Delta variant concerns over the Delta variant. People are concerned that the Delta variant is slowing the economic recovery of the labor market, which is most likely the catalyst as to why the 10-year is dipped the last week back down to 1.16. The Fed is taking a look at unemployment as economic indicators to which they would shift their monetary policy stance right now. Obviously, they haven't done anything yet, but there are talks of the Fed tapering bond purchases, which would impact the 10-year. So the Fed, obviously, they're not planning to raise rates now, but that's something they're considering based on the labor market. And obviously with monetary policy and what the Fed is doing with that could raise interest rates, but also if the Fed will taper their bond purchasing program that they've been doing right now, this would lead to a more volatile stock market and more money would flow into the 10-year, which would also increase the 10-year rate. And then another thing I wanted to add real quick, just a deal that closed on July 28th in Bronzeville. It was a 6-unit, sold for $204,167 a unit. And the loan on that deal was an assumption from last year. It was a $675,000 loan, and it was assumed by the buyer. And considering the 10-year treasury at that time was between, it was about 0.6 and 0.8. So the interest rate on that deal is likely within the range of 2.25 and 2.75. That's all I have today. Thank you, Travis.
Thanks for sharing that information, Drew. We're now going to pass it to our Director of Acquisitions, Vince, to provide us with some updates in regards to investors that's investing in the Chicagoland market, as well as the greater Chicago area.
Thanks for passing the ball over here, Travis. Definitely getting a large volume of inbound interest in the Chicago market. We're seeing some new developments approved for the next stage of construction by City Council, including a development staked to come to the South Shore community in a new Regal film studio, unrelated to the old Regal Theater. That has increased kind of the surge of interest in that South Shore area, initially catalyzed by the Obama Library construction, among other things. We're seeing esports studio coming to Bronzeville. That's a catalyst as well. And while, the local demographic becomes agitated by maybe political news or that sort of thing, we're seeing investors from out of town try to take advantage. Chicago still remains a market that has a lot of room for growth in proportion to its population. It clearly being the third largest metro area in terms of population. We're still seeing a lower price of acquisition than New York and LA by a large margin, with New York's average purchase price for a property going at $1 million, LA 500,000, Chicago still around 315,000. We're seeing a strong rental market. Chicago has a larger than average percentage of private sector employment, which bolsters that rental market strength. We're seeing, 17 Financial Times 500 companies 12 Fortune Global 500 companies holding their headquarters within the city limits and 32 within the entire MSC. That blended with over 50% of the population being renters, led to Business Insider rating Chicago as the best city to purchase an investment property. We're really seeing, like I said, a large volume of investors trying to take advantage of those things, and they're really standing in line. Bidding wars on certain properties are occurring, and we actually have moved a few listings that we had in the catalog into the hands of some of these out-of-state investors, and many are still kind of waiting in line for the next opportunity. So it's really, it's a good level of busy that we're seeing due to these factors.
Definitely some great information there, Vince. And I remember you mentioning the esports gaming arena and some of the upcoming developments in the South Shore community. I love to segue that over to Jason York, who's one of the directors of research and development on the team, to actually share a little bit more information in regards to upcoming developments in Chicago.
Yep. Thanks, Travis. Thanks for touching on that as well, Vince. I'll be brief. I'm gonna share my screen really quick. And I just wanted to kind of touch base on a new development that's coming in Lakeview. Address is 3460 North Broadway Street. This is a transit-oriented development, and it's a 7-story building comprised of 198 apartments. And it's also going to have 14,000 square feet of retail space, and it's full of amenities. And just driving by the other day, the construction looks great, and the scheduled delivery is going to be 2022. So this is definitely a development that we should keep our eye out on here in the future. Thanks, Trav.
Thanks, Jason, for that information. Now, Cody, are you able to provide us with some insights into what appreciation actually can investors utilize to force appreciation in their properties?
Yeah, definitely. Some of my favorite things to talk about when it comes to forcing appreciation is going to be a hot topic right now is the ADU pilot zones here in Chicago. If we don't know or didn't know, Chicago has an affordable housing issue, and they need to create more space. So what they've done is allowed both conforming and non-conforming units and accessory dwelling units or ADUs to become legal and implement them. Obviously, there's code that needs to be met, current code, not 1940s code, in order to make them applicable. But just adding one additional unit alone, an additional revenue stream to an existing unit, is a fantastic way to force appreciation. Another way would be to add cell phone towers. I've seen time and time again these weird honeycomb looking cell phone devices either on the side of a building or on the very top. And what I've come to find out is cell phone companies are pretty much paying top dollar to lease rooftop space for their new 5G towers. With the 5G towers, apparently you need more in a smaller with a smaller radius. So there's plenty of opportunity there, and to reach out to these cell phone providers to see if your building is a good candidate. Even adding an extra $100 a month, that's $1,200 a year divided by whatever cap rate your asset sits in that market, would be an okay indicator to see actually how much the value could appreciate. Even just taking $1,200 divided by let's just say a 7 cap could add an additional $17,142 in value just by signing a lease to a couple of square feet on your roof that you're not even using. That is it as far as ways to force appreciation on multifamily properties. I'm going to pass it back to you, Travis.
Thanks, Cody. Now, in regards to the ADU pilot zone and some of those upcoming developments that we're seeing in Chicago, I want to pass it over to our Director of Investor Relations, Kelly Rich, just to go over a few opportunities by the multifamily investment advisors.
Thanks, Travis. I want to talk to you about a few opportunities that we have with our featured listings with the multifamily investment advisors. The first one I want to talk about is a portfolio in West Chatham. It's a mixed-use portfolio of residential and office retail tenants, totaling 55 units within 3 contiguous buildings. The retail office tenants are both internet and COVID-proof. This asset presents a light value add opportunity and consisting of fully occupied buildings under long-term ownership. Units are well maintained, no deferred maintenance. It presents a light value add opportunity to convert the 1 beds to 2 beds to push appreciation. We're offering this at $3,150,000. Next is the Brainerd portfolio. This is an opportunity to pick up 59 units along 3 buildings within a couple of blocks of each other. It's another asset which you can make the economies of scale work for you, actually. It has high occupancy levels and recent capital improvements like the roofs, unit renovations, and security cameras. This asset provides steady cash flow. We're offering this at $3,825,000. Between the West Chatham portfolio and the Brainerd portfolio, you could pick up to 114 units in close proximity within the 2 of them. And last but not least, 5228 South Blackstone in downtown Hyde Park. It's a rare opportunity to acquire a trophy wealth preservation asset in downtown Hyde Park along the 53rd Street corridor. This 40-unit mixed-use building benefits from Hyde Park's high residential renter demand and high office retail demand as well. The 40 units consist of 24 residential condo quality units and 16 retail/office spaces with a long-term national tenant in Boston market. The property went through a recent renovation this year to include the individual metered utilities, in-unit washer and dryers, and more. This is available as a request for offers. Please reach out to us with any questions. And also, if you have any interest in any of these opportunities, I will be sharing our contact information in the chat. Our website, please visit us on our website, www.chicagomultifamilyinvestments.com. You can email us at investment@kwcommercial.com or reach us by phone, 312-863-8990. Thank you, Travis.
Thanks, Kelly, for sharing that information. And before we conclude the webinar today, just want to go over an upcoming event next Thursday by the NBOA. For 5 p.m. to 9 p.m., they're actually going to be having their summer soiree where you're able to actually network with investors in the marketplace in Chicago, as well as some of those commercial practitioners. And then, as always, we look forward to seeing you all next Monday at noon for the multifamily market update.